Guten Morgen. Yeah. You guys ready to go? Please click the like. Click the thumbs up. What do you guys want to cover today? Euro, dollar, pound, Bitcoin, gold, oil? What do you want to do? What's the biggest thing on your mind today? Yeah, it's up there now. Go check it out. It's uploaded to the war room. Rory wants XRP. All right. All right. Well, without further ado, welcome to Forex.Today, the YouTube community of 18,000 foreign exchange traders. We gather here today to plan our trades. So let's get on with it. 3, 2, 1, hit it! Sorry, just messing around with different settings, and for some reason, they're not doing what I thought they would do. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. How are you doing? Boy, you look good. Hey, guess what? My doctor says my blood pressure is really, really good. Yeah, awesome. Isn't that nice? Cool. Right on. That's always good news. Just thought I'd share that. It's a high-pressure job. So anyways. Hey, what do you want to cover today? Looks like we got some requests for XRP, Euro dollar, gold, Bitcoin, Euro dollar, gold, Dow. Okay. Cool. Also, we have someone in the swing group says the recording's not up there. It is now. Just hit refresh. Okay. All right, cool. So, awesome. Yeah, so I'll try to cover all that and maybe a little bit more. It is the end of the month, so it's profit-taking time. Profit-taking time. So that's great. Pound dollar, okay, I could do that. Pound dollar. Aussie yen, yes, I can do that. All right, so it's profit-taking day, and then Sunday, Monday will be new trades, right? Sound like I was rapping when I was doing the disclaimer. Is that how a white boy raps? Okay. Yeah. No. My rhymes are tight. You wish you could. All right. So, great. So I'll try to cover all that. Rand, trade balance was good. Yeah. Again, there's some profit taking going on with that, right, Henry? But yeah, that's good. I'm glad you're watching the trade balance. Morning, brah. All right, cool. So we'll do that. What else should we do? I guess that's pretty much it. It's a Friday. You feeling good? Feeling relaxed? I got my Pip Pirate cup going. Arrgh. So that's nice. Only 17 geese in my backyard, but now they have babies. Oh, you got to love goose babies if you're a fox anyways. Are we trading today? Yeah, we can do that. What do you want to trade, reviewer? Mexican export data. Yeah, that was disappointing, right? All right, cool. So I'll try to address all that. So thank you for the hard work that you're doing and the effort that you're putting into this. Thank you for your positive energy and the contributions that everybody here makes to the community. I appreciate that. If you need a broker, why don't you try out tradersway.com. They've earned my loyalty and respect. Give them an opportunity to earn your loyalty and respect. That's tradersway.com. Reviewer says no, thank you. Oh, pound yen. Okay, yeah, why don't we start with that? We'll do pound yen. For sure. We'll start with beast. Okay. All right. So, okay, since the election, which is in here, pound yen is generally up. So let's isolate the yen. We know that inflation is small. Right? They've readjusted their CPI basket and adjusting things for mobile prices, and they just have more and more and more not inflation. So on the long run, Japanese yen will remain weak. In the short run, the seasonality of Japanese yen should be sideways, actually, not up. Like, I don't expect Japanese yen strength at all. Okay. But maybe less weakness in general based on seasonality. But under current macro conditions, or let's say not macro, micro, if you're going to say micro is for one particular country, yen should be weak. So maybe it's weaker this year than typical, but we don't really know that. So what do we know? Okay. Well, we know there's general pressures to the upside, and that is global macroeconomics. Then we take a look at April is when we thought there'd be a rotation from extreme Japanese yen weakness to less Japanese yen weakness. You guys following that? Okay. And sure enough, for sure, we do, right? We do an inside month. Okay. Now, on the long run, I do expect further up. Okay. Will it happen in May and June? Yeah, probably. Okay. So if you're a bull, you should be trying to buy some dips. And if May starts out cold, we have a cold start to May, it'll kind of do this first. And then you try again and trade it like a range. Okay, there's two bullish entries for a range. Okay, one, you buy at the bottom. Or two, breakout. I'll just put breakout. Or you wait for the breakout. I'll put out down here. Breakout. Okay. So putting all that together, by the bottom would look like this. So you're kind of looking at, you see next week's target is actually a retracement back to 148. So if you're doing the first bullet point here, buy at the bottom, you'd be buying around 148. Okay. So that's a very significant decline. Could happen. Okay. The second one on the breakout is have it come up, retrace, and then up again. Okay. In the swing trading group, we talk about the seasonality of May being part of this as well. All right. So which one are you? I don't know. Okay. You drop into here. Here's the conservative projected target for the week. Isn't that cool? Okay. And right now, we are currently making a series of lower highs and lower lows. So if you were a scalper for the day, you'd probably do something like this. If you're a day trader, trading the possibility that this is next week. Okay. How many people think this is what we're going to have? Is anyone going to trade the 152 to 148 trade? Is anybody in that camp? Reviewer, it has to do with profit taking. Simple enough. I don't think anyone would actually be selling the pound yen proper, more like taking profit from the top. Okay. Okay. Well, Richard, we got to be careful. I didn't say yen strengthen. I said less yen weakness. Okay. So we got to be careful on the language. Sort of yes, but not quite. So not yen strength, but less yen weakness. There's a difference, right? Because it's all relative. All right. Cool. So I look at this as mostly, some pound profit taking or pound weakness, not necessarily yen strength, right? Because fundamentally, like I just said, there's no fundamental reason for yen strength. But we know there's ebb and flow of market participants and their participation, right? If you want to look at it like this. So look at this. Okay, this is last week's entry. I'm looking at this number, 149.50. And based on that number, this was the target. Okay? Everybody in my swing trade group knows that this is the classic trade. It's like the most predictable trade a swing trader can do. So you may say that this downward motion is just simply profit taking on the weekly swing. Not a rotation out of the monthly trade plan, but simply profit taking both weekly and monthly. Notice this is on Thursday. And as a swing trading group, we meet on Thursday to plan Monday's trades. Let me say that again. The swing trading group meets on Thursdays to plan next week's trades. So very often what we see is this momentum here, the shorter term momentum, is simply profit taking from what swing traders did last week. And then, of course, you have to say, well, if nothing fundamentally has changed on yen or pound, then maybe something similar to what just happened will happen in the future. Okay? Is anyone going to buy 150 if it drops down to 150? Is anyone going to look for that? Yeah? What about 151? It's a rum, isn't it? I'm like, as soon as I said it, I'm like, booze. Booze. $151.24. I have 151.29, but 151's down here, so we'll see. The thing is, if this ends up being a big bearish day, then it's going to pull some of these numbers down to 151. Okay. But anyways, so the way I stink is I say things like, oh, I don't know, somewhere around 151, and oh, I don't know, somewhere around 150. Let's do it like that. Okay? Somewhere around there. If I was a bull, I'd be a buyer. What do you stink? Smell like a plan? Yeah, Lucas has been a ghost, huh? He's popped in here and there, here and there. So what do you stink? Wayne Brown says, hey, does that mean Aussie yen also heading down? Well, you have to be careful with the language once again. I never said down. Both of those trades are up, right? Both those trades are an up bias. But you're like, well, what about right this second? Yeah, okay. Well, let's take a look. Aussie yen, we'll look at this one. Let's zoom in. Okay. So you might say this looks like down, okay? And I might say this looks like up. Okay? So let's break this one apart. Okay? The last period here was last week's entry is here. And based on that, this was the target. Okay? Last week's entry was roughly 83. The top was 85. We almost did a perfect trade. Okay. Now, what do the moving averages say on this time frame? The moving averages say, kick it over here, baby pop. Okay. And then you could probably line this up with a central pivot. And you could probably line this up with... Oops. A role reversal. What do you think? Is that plausible? How many people would consider that as a potential opportunity? Somewhere between 84.50 and 84. Well, 84 is pretty far away. So let's play the 84.50. How many people want that? Yeah, that's true, Johnny. I don't have it here, but you'll notice that that's just simply what the math is, right? So, yeah, I would agree. Lucas is very busy on the farm this time of year. Yeah, I guess so, huh? Digging in the dirt. What do you plant, Lucas? What do you got on the farm? Okay. All right. So what you do now is you drop into a smaller time frame. Kick it over here, baby pop. Okay. Okay. So this either works today or it don't work today. You see? So now you got to drop into a real small time frame, either a 15 or a 5, and you wait for your up. Lucas got wheat, corn, grain, sorghum, soybeans. No kidding. Holy smokes, that's a lot. Boy, that you gotta you must have a lot of equipment. So here we are on a trade. Are you going to trade the beast? Are you going to do like an OCO? You're going to scalp it? And then if you make money on the scalp, then you use the money you make on the scalp to fund the next trade? 5,000 acres, yeah. Very interesting. Yeah, what part of the world, Lucas? I'm trying to think of the land that you'd have. So like northern Saskatchewan, wheat we could grow. I don't know about no corn. I don't know about sorghum. I don't think soybeans. Seems more like a Kansas, Illinois kind of thing, but not northern Canada. Well, thanks for trying, Wayne. Western Kansas. Yeah, there you go. There you go. Sounds like more like Kansas. Yeah, Western Kansas. Yeah. Yeah, 1,100 are irrigated. Yeah, that's very cool. What amazing land to be able to grow so many different things. That's really cool. All right, cool, guys. So let's look at this. Oops. At what point would you start making a trade on this? Okay. We said somewhere around 84.50. This would be the scalping into a potential plan A. Okay. Would you scalp the first one just to see if you can make a couple of bucks? Okay. Is that how you do it? Like a 25-25 OCO or something, just for fun? What do you think? That means you'd have to get way the heck up here to make any money. You'd have to make a higher high, which I suppose if you can make 25, you'll probably make 100 on this thing, right? Your stop would be way down at 25, so you'd find out if so this is sort of like a 50-50. You're either right or you ain't right. Got a 5-8 cross on a 5, but a 21.55 pointing down. And you got this in your face, so you might want to wait for a break pullback. What do you think? Anyone doing this? Anyone going to do a scalp? Is that what you want? Notice that you're really just trading off the 4-hour 21. That's all this really is. So that'll either work or it'll be way down at 84. So it's like a binary option, right? Now, the other thing you could do is say, I'm not going to make it a scalp. I'm going to make it like a day trade, for example. So a day trade would say 84.50, right? And for an entry, and you're really heading up to about, about 85. So your day trade here which sounds amazing because that's nothing on a pound. But your entry is sort of 84.50 is kind of here. And your target is basically the bullish aggressive day trade. Okay, there's your 85. So you buy it here. Your stop is here, so you're risking 25 and you're going to 50. So a 2-for-1 risk reward ratio. Okay. Now that's a day trade, and you can do that. Now here's the interesting thing. Let me just change the indicator here. My bias pivots. Let's do next week's swing trade. You say, right? You could do it this way. If it kicks off there, instead you would go for next week's target, which is, we'll call 85.50. Okay? Which is the conservative target. So now you'd have to go back and adjust your EA and say, well, if I get that right, 85.50 is actually 100 pips above, because you're buying at 84.50 going for 85.50. So that's 100 pips up, but you're only risking 25. You might say 4-to-1 is too much. Maybe you want to do, right? You could do something like a 33 OCO and make it a 3-to-1. So let's play with that idea. Okay. So 33 below 50. Okay. So your stops, I don't know, somewhere in there-ish. Okay. Somewhere in there. And your target is up there. Would you do that a 3-to-1? The logic of switching that out is you have a 3-to-1 risk reward ratio, but you're also basically incorporating next week's swing target. Okay. And of course, if this goes up, this will move up as well. And by the time we're here on Monday morning, New York time, if it goes up today based on this trade this little scalp that you make, then this will have moved up and it'll be a weekly swing. And the only thing you'll have to do is probably give yourself an extra 50 pips by moving your target slightly higher. So instead of going for 100 pips, you might get 150 pips because your entry was so great. You're combining a role reversal, which is price. Okay. You're connecting a 21 EMA, which is dynamic price. And then you're connecting the future pivot point, which is market. Okay. Market support, price support, dynamic price support. So you're hitting this moving average. Moving target. You're shooting at the deer as it's running. Okay. The trick with trading is the deer running left? Is the deer running right? Is it running toward you? I can't even draw that. Is it running away from you? Or is it running toward you to the right or away from you to the right? Okay. And that matters, right? We call that relative. That's what the theory of relativity is about. Okay. So we have to kind of line this up. So right now on a small time frame, you'd be looking for an entry confirming that this 50 level is holding. Now, of course, if you don't get that, then this trade doesn't exist. Right? Lungster says, won't the stock market take profit as well? Yes, and I believe that is happening. Okay? Yes. I would expect that as well. So I spent more time yesterday analyzing potential stock investments than I did Forex investments because I spent 4 hours focusing on Forex and probably 5 hours focusing on stock. So to me, which is funny, right? Because that's a half day basically. So I'm good on Forex and I had to spend more time on the stock market because I'm trying to. One of the things I love, right, is this idea of sell in May and go away. I love it. I hope everybody follows that cliche. Because then I'll buy, I'll buy low. Okay. Okay. And I'll follow Longster's thought here. Won't the stock market take profit at the open? I don't know about at the open, but thus having a minor risk-off situation. Not risk-off. You have to understand. Profit taking is not risk-off. Market collapse is risk-off. You guys have to be very careful with your language, right? Don't be so dramatic. It's profit taking, okay? Not risk-off. It's still risk-on. Yeah, Matus is buying lows in May. It's great, right? Yeah, I love cliches because a cliche means you can plan on what people are going to do before they do it, and therefore you could take advantage of that. Okay. Dan the Man says, how do you analyze stock? Well, I must admit, it's difficult for me because I'm a macro trader. Right? Let me draw this. I have to write it, right? I'm a macro trader, which means essentially I'm a value trader, but not based on an inherent intrinsic hidden value or something, a hidden intrinsic value. I'm not analyzing 15 stocks and finding one that's mispriced or something. That's not what I do. I'm a global economist, right? I'm a global macroeconomist, a properly trained economist. So I look at these situations, and when the entire sea has gone away, like think of the tsunami, right? Normally, right, think of it like a tsunami. Normally, there's an ebb and flow of tide, right? And day after day after day, it's about the same. The peaks and valleys kind of change at the time of day, but yeah, there's a high tide and a low tide, and then a medium tide, and then a medium low out, and then a higher tide, and then a low tide, and then and that just, comes and goes, and depending on how the moon is, it changes slightly, and maybe it changes seasons, and every once in a while, there's storms that make it a bigger tide and all that kind of stuff. Got it. That's normal. That's seasonality. That's cycles, like lunar cycles, and there's, but it's relatively predictable, right? Great. And the storms would be like strange volatility or something, but you can handle that as well. But then there are certain times, like an exogenous shock, where the entire ocean just goes away, and you're standing on the beach and you can't see the water. And you're like, dude, something's really strange here. Okay? And that's where I kind of come in. And that's what I mean by value, where I say, I understand that the stock market's down 30%. Okay? And I like to time the tsunami and then just get out of the way. That's what I do as a macroeconomist. So like back April 19th of last year, I said, buy anything you think any company in the stock market you think will be around 10 years from now. Okay. How many people remember that speech? Buy anything you believe will be around 10 years from now. That's the hardcore fundamental analysis. I'm not talking about analyzing the management team, analyzing expected future profits, analyzing their research and development and their ability to create new future products, right? Like, I'm not saying analyze their profit margins, their competitors. I didn't say do market analysis. I said just any frickin' company you think will be alive in 10 years. Just buy it. Okay? That I said that in April 2020, April 19th of last year. Okay? So it's a different type of fundamental analysis. It's not the fundamental analysis of a stock relative to its market and relative to its competitors, right? That would be classic fundamental analysis of a stock. You can do it top down, you can do bottom up, whatever you desire. What I was doing is more macro. I think what I said is buy anything, buy everything. Yeah, Highlander says, because there's, I think, 2 or 3 or 4 speeches I made around that time. The other one I said is make a list, but this was on the way down, if you guys recall. This was probably February and March. The stock market was collapsing. And what I said is make a list of 10 companies. Or let's say stocks, really, right? Make a list of 10 stocks you've always wanted to own, but you couldn't afford. Whether it's Apple or Amazon or whatnot, Tesla, anything. Make a list of 10 stocks you'd like to own, but you don't own it because it's too expensive. That's what I was saying when the stock market was on the way down. And then on April 19th, I believe it was April 19th, give or take a few days, I said, that's it. That's the thing I'm looking for. Buy it. It came down to one moment in time. Okay? I have to put my glasses on. Jay Powell said one thing. He runs the central bank. He said one thing, and I said, that's the thing I'm looking for. That's it. Do it. Okay? And what indicators did I use? None. What was the one thing? You'll have to go back in time, Wayne. Go find it. Okay? But anyways, not an indicator. Here's the reason. At that moment, every indicator said down. That's it. So I was looking 6 and 12 months in advance. There's no indicator on your chart that does that. Everything said down, 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 down. Okay? That's the difference. So very often, like in the swing trading groups and stuff, when we talk about deep fundamentals, I'm talking about stuff 2 weeks to 2 months in advance. And very often, nothing technical exists yet to confirm my hypotheses. And then, of course, after the fact, we go back and we go find it. And I'm like, see, this is what I'm talking about. Now you can see it. Now it's happened. But I talked about it 2 weeks ago or 2 months ago. And by the way, not just like a passing conversation. We prepare week after week after week for like changes in market conditions. We can talk about it because it is fundamental. So I talk about fundamentals. I talk about seasonality. I talk about macro and market forces that create this ebb and flow of market. But the thing is, your technical analysis is backward looking, so it hasn't happened yet, so there's nothing to predict it. You see the difference? So I talk about things 2 months in advance because it's likely to happen. But there's nothing to say, like you don't even have an indicator that goes that far. So like nothing, your indicators just don't think 3 months in advance. There's nothing on your chart that thinks 6 months in advance. Okay? So it can't be everything. Okay? Your charts are good. I'm not poo-pooing on technical analysis. I am a lover of technical analysis. I love technical analysis. But there's a lot more to it than that. Okay? If you find that you're a pretty good trader, but you're not happy with your levels of profitability, it's because you're missing a big piece of the game. Okay? You're all offense and no defense, or something like that. I don't know the good analogy. Okay? Cool. So what do you think? We're sitting here on a tiny little chart, little 5-minute chart. Would you buy something like this? And if so, would you go for 25, 50, 100, or 150 pips? Which one would you go for? And by the way, you would risk 25. Which one would you do? Oh, right on, Daniel. That's cool. Yes. Yeah, that is wonderful, isn't it? The noise. So much noise in the market, isn't there? I'm trying to teach you guys how to be smart money. And smart money looks for predictability. Okay? But if you can't look forward, then you're not predicting. So what is predictable? Dan the Man says 1,000. Well, so that means you'd be going for 95. Yeah, okay. I don't know. I'd have to look at that. It's plausible for sure. But buying at 84.50, going for 94.50, yeah, it could happen. Mohammed Yosef says, hold an MBA, cool, and a CFA, awesome. And you say your approach is quite unique for reading the fundamentals? You think so? But your background is more finance, though, right? So, right? But Mohammed, that sounds like a good opportunity to sit down and talk, huh? We can talk the fundamentals. I don't mind being unique. I don't think I am, but I could be. I don't think so. But you're a finance guy and I'm an economist. Now, I have a graduate degree in finance as well, but so, you know, I'm no chump on the finance side, but in fact, what I tried to actually do, Mohammed, and this, you probably find this interesting, I tried to take, you know, sort of a classic economics, econ, okay? And I tried to add some like behavioral finance to it. Okay. Like, for example, why does the dollar get strong when the U.S. economy is good? And the economist would say, oh, because imports are greater than exports, which would also be true. But also, it's because people front run. But that's a behavioral finance question. So it comes down to like, what does that mean? All right, well, think about the real estate market. And when interest rates fall, it means you can get money for cheaper to buy long-term investments like real estate. But does the average Joe look at falling interest rates as an opportunity to jump in and buy a house? And the true answer is a financier would say, yeah, look, I'll do the discounted cash flows. And when you drop the interest rate, the amount of money you save over 30 years is massive. The difference between 3% and 2% mortgage is massive. So people must be buying like crazy, right? But then the economist says, well, yeah, but interest rates are falling because everyone lost their job and housing prices are falling. Okay, well, housing prices are falling. So now you have cheap money you can borrow from a bank and prices are low. So once again, a financier would say, well, buy, you should buy, you should buy. But a behavioral side would say, well, look, people are not confident in the moment. So yes, if you were a billion, if you're $1 billion fund investing in the real estate, okay, you would do it. But as a regular, average citizen, when housing prices are falling and interest rates are falling, you don't actually buy. Okay? The flip side is when interest rates are going up, it's because you have a good job, everybody's got money, and prices are high, right? That's why interest rates have gone up. So now you're like, oh my God, my house is up 10%, but all houses are going up 10%. And you're worried that mortgages, now that they've gone from 2% to 3%, you're worried that you think they're going to go now from 3% to 4%. So you're in this process of rising interest rates and future expected rates rising further. What does it make you do? It makes you buy now. Because you're like, you buy now because interest rates are rising. You don't buy because you think interest rates are falling. So another behavioral finance side is as interest rates are falling, you don't actually refinance your mortgage, or you don't actually buy and get a new mortgage, like to buy a new home, because you think they might fall further, which is a form of front running, right? Because you think you might be able to get lower interest rates. So you don't buy when they're falling, but you do buy when they're rising. And you're like, but wait, interest rates are going up. Things are getting more expensive. You shouldn't be buying. You should be buying when they're getting cheaper. It's not actually true. Humans behave the opposite way. So I'm trying to take economics and behavioral finance and combine them. And when I do that, I find much of what I've taught, not much, but some of what I was taught in my formal education. By the way, I had my opinions before getting an education, which also makes my experience a little different, right? I already had 15 years of self-taught economic background. Then I go to Harvard, and then Harvard teaches me about economics, but I'm like, I already know economics and finance from the real world. So now I get the classic education, and I see truth and then fuzziness inside what I'm taught. And then I move forward, and here I am. Right? So maybe that's it, Mohammed, where I have 15 years of experience and then, 5 years of Harvard. And then the output of that is it helped me identify what I know, and then sort of back that up with really it was research. Okay. So if that makes my analysis unique, that's cool. I don't know if I know that. So I'm glad you tell me. I just know what I know and I make my decisions, right? So cool. Boss says, yeah, maybe it's topish. Yeah, time to take some profit. Okay, so that's why we're here. Okay. Yeah. Okay. Well, my analysis is unique and hopefully good. I'm also like the least popular professional trader, or let's say any trader on YouTube. I don't know why. Just amazing. Just amazing. Oh, is that right? I suppose I could live a fancier lifestyle. Chuck Ducks, because I don't give live trades in the stream. Okay. Well, here's the problem. Like, I find that the likelihood a long-term or medium-term trade occurs in the 60 to 90 minutes that we meet is pretty low. Like, we're still sitting here on a 5-minute chart waiting for a conservative disciplined trade to set up. Right? So if I had bought this, it would have been a bet. Do you understand that? Like, that would have been a bet. I bet you it goes up from here. Why? Because of this. Yeah, but it's a downtrend. So how do you get the probabilities in your favor? Well, you don't. Okay. So right? So it takes time for the probabilities to change in your favor. Now, the one thing that we do have on our favor is we have this up on a 4-hour chart. So that's that. Okay. Going back to here, I think we have the capability of waiting for one of these, but this might take longer than 90 minutes to set up, whether we end up buying this or this. This could take the full 90 minutes. Okay. Okay. And then, of course, if I go through and analyze gold and Bitcoin and XRP and 5 other trades, well, then this one, I don't know, could be, right, missed or something, right? No, I know, Chuck. I know what you're saying. Yeah. And I'm not sure what that does for them, but, what do they make? $5,000, $10,000 on YouTube views or something? Okay. One of the coolest things about what I do is I get to meet once a week with the swing trading group and see people's faces. And they are friends and family. That's how I look at the swing trading group, friends and family. And I wonder if they have that same, they probably do though. They probably have their followings. Yeah, so 3,000 a month. You mean in income from YouTube? Cool. No, it's funny because, whoa, Maida. That's very kind of you, Maida. Thank you. Just 62 likes, 130. Yeah. Thank you, Maida. That's really cool. What I was saying is, the few webinars that I have seen in my life, there's some stuff like on FX Street. I like FX Street. I've been working with them for a long time. But as soon as like the webinar stuff started to happen and people turned on their cams, you can tell that people live in, let's just say, they're not wealthy. But they're the Forex guru, and they're teaching you how to trade, and they're giving you little signals and stuff. But then you see the house they're living, and you're like, dude, it seems doubtful, right? It doesn't add up to me. So I don't know if that's arrogant on my part or not, but it's like, I wonder if it's true. Like, to run a YouTube channel and make $3,000 a month, you're like, why wouldn't, I mean, I don't know. Things are strange. So it's really cool. The swing trading group, it's small. It's not a lot of people. I don't heavily promote it. It's just, it's us getting together and planning the future and supporting each other. And I haven't done group work in a while. We'll need to get back to that, but it's just really nice. That's what I like. All right, so here's our little move. Now the question is, are you going to buy the dip? Okay, your stop is going to be way there. Right, right. Thank you, Maida, though. Thank you. That is really kind. You're a valued member of the community for sure. For sure. Rage missed yesterday. The video is up. Should I try it? Okay. Oh, thank you, Maida. Should I do it? That's interesting, Chuck. Chuck, so how do you know those numbers? Okay, that's it. It's gone. Sorry, I'm watching the chat more than anything. This is the problem with trading, right? So, anyways, let's, what did we say? From 50 to here, right? Do, 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 do. The good times that made us laugh outweigh the bad, right? Because we're... You want to try it? Okay. Now, if we're here, you see how to put the stop, and there's the limit. So that's a 25. So we're at 84 and to 85. So that's a 25. No, that's a 33 100 OCO. See what we did? So it's a 3 to 1. Oh, are people teaching my methodology? That's interesting. Really? Be interesting. I probably taught them how to trade. I'd recognize their names. Oh, I see what you're doing, Chuck. Yeah. Is that right, Mina? Yeah. Be interesting. I can just look them up. I probably. So sad. Oh, well, David Pigler worked for me. He's like a brother. Is that right, Jim? Yeah, no, David Pigler's not a copier. No, no. Yeah. Cool. Just sitting here. Okay. I think 33 pips is way too many as a stop, but it's the idea of 3 to 1. Okay. All right. Whatever. So let's move on.com. Let's take a look at the commodities. Okay. My oh my, WTI. So not long ago, we were here, if you recall. And we're looking at this. And this line represents peak inventories, the historic peak inventories in this season. Okay. Wayne says, is David still with me? No, I talked to him about, I don't know, 6 months ago or something. He gave me a call. Stuff like that. Kurt Worley is a very, very successful data scientist. Okay. So anyways, we're just kind of stuck in there doing that normal kind of thing. Bitcoin's obviously still bouncing around, still stuck at the 50. I don't know, like this is sort of a dangerous price level for Bitcoin, I think. But you can see people are already front running May. So I guess you'd have to go into a smaller time frame. So the May entry is 52,755. Well, we already hit that and found support. So that there's another indication that some of the traders that trade Bitcoin know what they're doing. It's not a great entry. In the process of where we are, it's mediocre. But once again, it's just what it is. This is clearly a right? This predicts actually the higher one. This predicts 62. Okay. So that's what's being played here, right? So we can just mark this down, for example. What this is saying is 52,750, 52,750 and then it says 62. I'll put 62,150. Okay. Okay. Okay, and that's similar fashion to our previous trade. And our previous trade was, I think it was 55. Remember, it was a 618. Oh, because it's on hourly. Let's say 4 hour. Buy it at 50, take it to 65. That was the previous trade, if you guys remember. Okay. No, it wasn't that one. It was probably this one then. No. That one. No, I would have had it like this. Yeah. Okay, that one. So we had this one nailed. Okay, buy it at 50. The target was 65. Okay. And so this usually would reset the whole process and add a huge vulnerability here. But like I've been saying, I don't know if this is a true market. A true market would have people, some people buying Bitcoin and some people buying dollars. But I think what happens is that it's up, take profit, up, take profit, right? And then stop, up, take profit, stop. And it's other people getting knocked out and stuff. And it's just buyers and exiters. Buyers, exiters, buyers, exiters, buyers, exiters, buyers, exiters. And the exiters could be for profit, it could be for loss, but they may not actually be proper sellers. So I don't know if the proper normal rules of engagement exist here, because I guess I could say it different. I don't think this is people selling. I think this is people getting knocked out, right? This is profit taking here. Okay. And this is people getting knocked out. And then people buying it again. And then anything going here, it's just, again, people getting knocked out. First wave of profit taking knocks out everybody else. So it's like you get 80, you get 20% of the market exits for profit, and the other 80% just are pissy little leveraged, tiny little retail traders getting knocked out, and then a hedge fund buys it here, and then retailers get wiped. Okay. So that's my worry with Bitcoin. I'm not saying that's happening. That's my worry. Oh, and did I just kill the chart? I just killed the chart. Sorry about that. XRP, someone requested that, so I will do that. Okay. So once again, if this was proper, oops, didn't want that. If we had proper technical analysis, which again, I'm not convinced is there, but if it is, okay, I want to grab a pivot, but you can see there's probably a front run. So that's already in play. So this will actually not head back that down because we're already in it. So the next wave is if market is done, then all you have is price. So now you'd look at it this way. Okay. Or you'd look at it this way. Okay. Then you'd look at cycle levels. So it hits 60, comes back down, or 1.6, comes back down to $1.50, and then maybe you take it north. Okay. So that's cool. Some of you guys say people are copying me. That's interesting. So let me know who. I'll go check them out. I'm interested. I probably know them. Salado Club says Bitcoin is pure technical analysis. Well, to have pure technical analysis, you need both buyers and sellers. You can't, right? I kind of look at this and I'd have to assume XRP or Bitcoin, for example, are 90% buyers. It's in Forex, it's a really amazing because you'll find out, over the years of trading, every time I ask people if they're bullish or bearish, typically, unless I've been coaching the heck out of it, right? But if I go into let's say, go into my non-farm payrolls webinar and I say, all right, are people bullish and bearish? I'll almost always get 50-50 or something close to that, which means that's a proper market. Bitcoin, it's either buy or not buy, I think. So anyways, take a look at gold. Do I know Astro FX? No. Trader Nick. I don't know this guy. I don't recognize the name. Wouldn't be difficult. Let me see. No, I don't know this guy. Chuck says buy or not buy. That would be for all cryptos, not only BC. Yeah, probably. But like I said, I don't know. So next week, I'm starting my cryptocurrency course at MIT. So I can't wait to see what I'll learn. Cool. I mean, I have no idea. Okay. So looking at gold, one of the things I'm eyeballing is like this idea. Okay. There's plan A going on here and plan B. You can see plan A is actually already executed yesterday on Thursday. Thursday, the best trading day of the week, right? The beginning of my week is Thursdays. So right now, the thought process is something like, am I a buyer of gold at these prices? Now, for gold to go up, I have to have dollar weakness. Hang on a second. Sorry, I just got a text from my wife, that's all. Okay. Oh, I don't present that often. Well, Nelson, that's just technical analysis. So that's pretty easy. It comes down to a 5-minute chart or a 1-minute chart typically. Obviously everything starts with top-down analysis. So even once you have a fundamental macro bias, the rest is just technical analysis. So, for example, I'm a bull on gold. Now, in February and March, gold was falling. So every day on these webinars, Nelson, I'd say, look, I'm a bull, but the market's bearish. The market's bearish. So there's nothing to do, nothing to do. And then suddenly we get to a point where at the proper time, and we knew that was about April 1st, in fact, ended up being the bottom. And then, you know, there's a time when you look for the pattern. Now, a pattern is pretty simple. There's a few patterns, but right? But what you want to look for is, you know, at the right price and at a reasonable time, you look for indications that the market is going from bearish to bullish. Now, this is the right side of a double bottom, so you can imagine it like this, okay? And then you get moves like this. So you could buy a double bottom, or you could buy the higher low, higher high, right? So this is a 1, 2, 3. And what you'll find is it'll occur on a 1 hour chart, but sometimes it'll occur on the 5-minute chart too. And you find yourself in here. This is an aggressive trade. This is a conservative trade because it's after, right? The higher high, higher low. Okay. But what most people lack is understanding that it's likely to reverse somewhere around April. Okay. So being ready, willing, and able to catch the double bottom before it happens is the fundamental side. So let's try to move that. Okay. That's what I'm trying to get at. Okay. And then using pivots, using price action to get into your target. So going back to here, this is an M2 and it's right. So this entry is suggesting in here you should take profit by the end of April. This is the beginning of April entry, and this is by the end of April where you should get out. Okay? Here's a second chance entry if you missed the first one. Okay? You following me, Nelson? So the issue is you have to be ready, willing, and able here or here to even have a proper entry. So imagine when you got to this 1, 2, 3 area, you drop out of an hourly chart and you drop into a 5-minute chart or a 15-minute chart. And you say, okay, this is the higher high, which predicts a higher low. And the way I outlined it was somewhere in here. So I kind of remember what we were doing back then. So let me update this. Okay. What I had done is I drew a zone and I said somewhere between the 382 and 618 Fibonacci retracements, we are likely to get the 1, 2, 3 because that's what we call the sweet spot. One is the double bottom, 2 is the higher high, and 3 is the higher low. So by definition, the sweet spot is 382, 50%, and 618. So as you approach this, Nelson, okay, as you approach this 382, that's when you drop in. And you're ready, willing, and able to buy it. So now to go into current time, okay, we may have an opportunity here to buy this zone, which I've highlighted. So let me show it again. This is part of Plan A, which we did a couple of days ago, by the way. Okay, you can see we hit the target. And now immediately popped up. So there's some hope that it does continue. So the trade plan currently is if you're able to get long in these prices, this is just, again, plan A, which is from here to here, here to here, here to here. Okay? If you're able to get long somewhere around 1775, or 1750 is actually what it is. So let's do it that way. If you're able to get long around 1750, Okay, now I have to emphasize we planned this 2 or 3 days ago. Then our target is 1850. Okay. Probably take a couple of weeks to get there, if not longer. Okay. So that's strategy. So now your tactics are, all right, you kicked off 1750 already. Because remember, again, several days ago, we had this as a plan. So now what? So really, it's this number here. I don't really care about 1750. It's this, okay? So if we got that right, if that is the deal, remember, it's an if-then statement. If this truly is the bottom, then we're not looking at any of this anymore. Okay? We've already done that. We've already done it. Okay? So we can erase it from our mind, because a lot of people get caught up in what was, or okay? So we can just delete this. None of this matters anymore. All of this was about strategy. We're not interested in strategy anymore. We already made our strategic decisions. Okay? So we just kind of get rid of all of this. What we're interested in now is tactics. So how do we get into the trade is Nelson's original question. Higher high, higher low, higher high, higher low, higher high. This is a 5-minute chart. Okay? Mohammed says, what frame do I use for top-down analysis? Generally not more than a day. But because we do swing trading, I look at weekly and monthly pivot points, but I might use a 4-hour chart. But it's similar to someone else using a daily chart or a weekly chart, because I'm projecting 3 weeks in advance, right? Sometimes longer. I think it was 2 or 3 weeks ago in the swing trading group, I had people plan 3 months in advance. Plan not just like the trade, but the price action. Okay? 3 months in advance. And people are stunned because we don't have indicators that go that far in front. So I'm like, well, assuming you're right, what will happen? Right? So it was like reverse technical analysis. You had to, but anyways. So this is how you put these entries in. Okay? Okay? So this higher high would have predicted a higher low, which then predicts a new higher high, which then would predict a new higher low. So on a 5-minute chart, right, this could have been your entry, because you can see it's about a 50% retracement. There's a multitude of different techniques. I don't really care which one you use. Okay? But nonetheless, you want to buy a dip. And if it makes a higher high, you want to buy a dip. Okay? So now you really got to zoom in and say you're only looking at this. So now you trap it. Okay? And you can do things like classic breakout and retests. Up, down, up. Which is the same thing that I just showed you. So this is the problem. On a 5-minute chart, I'd probably have to sit here for 2 hours to get the entry. Not very cool YouTubing, But here's the thing. You could just pull the trigger and probably be fine. And be lazy and sloppy. Okay. What do you think, Nelson? Do you have a follow-on question? Okay. Oh, is that right? Chuck Duck? Yeah, that sounds terrible. Okay. Okay. Now remember, this is plan A of two plans. The next one is quite a bit lower, and that would take days to get down there, and you'd have to wait your turn. We have to be careful here because this is not a trend. If anything, it's like that, and what we're predicting is that. So we got to be very careful. But ultimately, I think this is the 4-hour EMA, and that's all you're doing is buying the 4-hour EMA. Okay. Okay. So here's the good news. Let's change this. The good news is we now have setups. Okay. For example, okay. The problem is we're forcing a trend, but we're hoping that. So I don't have much expectations for May, for example. This could probably happen for a couple of weeks, and then what I'd like to see is this. I'd like to, if May comes in like a lamb and goes out like a lion, and June is red hot, that makes sense. Because we're digesting the Fed meeting and we're digesting earnings season and all that. So if it comes out, slow for 2 weeks and then rise up, I'm fine. Fine with that. Totally fine. Okay. Taking a look at Kiwi, 4-hour entry off the 21. And then we got this going on. And then we got the buy zone down here. You can see last month was quite mediocre. The month before was quite mediocre. Here's the turn around April. So, once again, what's your general plan? Well, that would be what I'm looking for. Okay. Once again, very similar here. Buy the dip. If you're a bull, you buy the dip. Okay. And this is us just trying to kick off that 4-hour 21. Okay. Down 3 pips. No. How are we doing here? Well, probably want to buy a dip. Dip, 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 dip. cell phone is dying. What do you think? Are you a buyer or a seller? This is from November 1st to now. See? I want to point out like resistance becomes support. Right? Resistance becomes support. Okay? Up, 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 up. Resistance becomes support. Resistance becomes support. Resistance becomes support. So you can do this. That's called price action, by the way. So that's the next 3 months. I still haven't caught up on my sleep from Wednesday. Oh, that was a tough day, man. So here's the thing. Most people lose sight of this and they're like, oh, well, Wayne just told me the next 3 months what's going to happen, but I'm not going to incorporate that in my planning. Well, I would suggest to you that this is a strategy, and from there you drop down and use smaller time frames. Okay, so if euro yen fell every single day next week, does it change anything? Does it change the strategy? What would you do knowing this if euro yen fell on Monday, fell on Tuesday, fell on Wednesday, fell on Thursday? Now what? You'd probably look to buy because it fell on Monday, because it fell on Tuesday, because it fell on Wednesday, maybe around Thursday, maybe Friday, maybe Monday, somewhere in that 72 hours worth of trading, you buy it. And now you're done for the entire month. Now, I do expect less yen weakness, but that doesn't mean down. Okay? That's the virtue of planning ahead. You can say, ooh, cold open to this market. I think I'll back off and see. Maybe it'll counter trend off of the M1. We'll see. I'll take a look at it. If it doesn't hit it by Tuesday, then I'm going to have to wait for some sort of price action confirmation on Thursday or Friday. And now you're thinking days in advance. You're thinking days in advance now. Changes things in a good way, I think. Not with fibs, no. But fibs are part of price action. Fibs inevitably incorporate pivot points, much the same way that like Elliott wave, you could just say is basically Fibonacci analysis. Yes and no. Because like Fibonacci would they predict like a 382 predicts a 1618 and a 618 predicts a 1382. Elliott Wave is doing things like, they're predicting the down as well as the up, where Fibonacci is just saying because of the down, all you have is up. And then when you get there, something's going to happen, right? But it doesn't tell you what. And Elliott Wave will tell you, expansion wave, and then there's going to be a 3-wave correction, and then, then you're going to fib that whole junk, and then you're going to get like this new expansion wave. And Elliott Wave's trying to predict the future a little bit, not really the future, but the future price. And that's, again, a behavioral part, which isn't wrong. It isn't right. It isn't wrong. It just is. But they're all kind of, that's why I don't really care what indicator you use. They inevitably are trying to tell you the same thing using different math or similar math or different ways of drawing it, whether it's crossovers, whether it's green arrows, whether it's something else. Ultimately, you don't have to be a rocket surgeon to buy something low. If it's down here, you're not a buyer. But somewhere in here, you're a buyer. It's not that complicated. You can use any tool you want or no tool at all. Like here, all I'm doing is telling you that this is the average, well, not average, but this is the mean price. That's all this indicator is telling us. Okay? And when price deviates from the mean, when you add up all these deviations, okay? These are all deviations, okay? And let's say you kind of, I don't know what to call it. It's not quite true, but let's say you average you average the deviation. So what's the average low deviation from the mean? What is the average high deviation from the mean? And what you end up getting is a standard deviation. It's not actually average, but different math, but similar concept, right? Like mean is not really average, but it's a very similar concept. So what is the average price over this time? And when it deviates from the average, how far does it deviate before it reverts back to the mean? And so we have all this information here. Okay? Hang on. My wife's texting me again. Uh-oh, I'm in trouble. Wayne's in trouble. Okay. Okay, so is it fibs? You could use fibs. So for example, Fibonacci is just the same thing as any other move. So let's say you're up to resistance, but you're a bull. You buy a dip. Look, it's 618. Great. So now it makes, a higher high. Okay. We'll put it like this. Okay. So now we're measuring from this low to this high. Oh, look, a 382. Okay. Then that makes a new high. So you can do this one, but let's do that one just to speed up the process. Well, maybe it is this one. Yeah, it is that one anyways. All right, so this one would have had one. Okay. And then this one has one. Okay. And now that one. Okay. And now we're here, okay? And you would say, I don't know, somewhere in this zone, you'd be a buyer. If it were me, it'd be pretty close to 131. It's all the same. It's all the same. Only the names will change every day. Seems we're wasting away. Okay. If you're going to use this, here's what it says. This is a buy. This is a buy. This is a buy. And this is not a buy. So we need a full cycle down. So maybe it comes all the way to the bottom. Okay. And like I said, that wouldn't shock me for May. Okay. Now, your average guru would probably tell you that this is a sell, this is a sell, this is a sell, this is a sell, and this is a sell, and that is not true. Okay? But that's a buy, that's a buy, that's a buy. Okay? So, yeah, in the link that Jim shared, there's a whole 20-minute video on how to analyze the difference between a true buy or sell using oscillators. But to me, it's the same thing. You could use Fibonacci, get the same thing. You can use price action alone, no indicators, get the same thing. Check out this Supreme. I'm living low next to the base. Turn up the radio. Okay. Yeah, well, I just calculate everything in my mind now. I don't really care. But if you find them helpful, use them. That's what I preach. If you find the tool helpful to make a decision, use it. You don't find it helpful, don't use it. Okay? But MACD is simple. I look at this and it tells me the 21's above the 55. What's the complication? There is no complication. And you're like, well, is it telling me this is going to come down? Is it telling me this? Is it telling me that? Dude, it's not telling you anything. It's just math. So we can use different math here and say, I guess, try monthly. Okay. And I find this very helpful. Okay. Did MACD tell me that this is where we were going to have consolidation? Because remember, MACD went like this and started coming down. Did it tell me in advance? No, it didn't tell me anything in advance. But pivot points did, because it's a leading indicator. And they said, yeah, somewhere around there, it's going to consolidate. In fact, we thought it was going to come down, but it didn't because it's so bullish. Cool. Okay, much more interesting. This says buy here and exit here. Okay. This says buy here and exit here. But we already know that. And we also expect, a pretty decent pullback, maybe even a very big pullback, and then re-entry. So how do I come up with that data? Is it the MACD? No, it's not the MACD. Is it the pivot points? It's not even the pivot points anymore. Now we're talking about fundies and seasonality. Well, I've been teaching pivot points for almost 20 years now, 15 years for sure. So I'm onto something for sure. Once again, it's just math. Once again, just math. Cool. So, Maida, I'm going to buy a nice bottle of wine, kind of like this one. And I'll put it in the cellar for at least 10 years in your honor. A 100% Petite Syrah. Yeah, Nuno, do you know? You probably. I mean, you don't know this Vinter, but this isn't. I guess I'll go here. You know your wine, I'm sure, from Portugal, but you can't. This doesn't sell in a store. So, but you can probably look it up if you wanted. The vineyard is from the 15th century. So think of Christopher Columbus. Yeah, but it's 100% Petite Syrah, so it's going to be a little spicy. Okay. But anyways, oops, wrong one. But like I said, I just put a whole bunch of money into buying wine made from French vineyards that have very, very old vines, and their production is very, very low because they're so old. And it's expensive for the vintners to use these old vines. They were planted in the 1940s, right, in southern France, in the Rhone River Valley. And because they're so old, the yield per vine is very, very low, although they produce fabulous wine because they're old. There's a different taste. You can literally taste it. But the thing is, because the production's so low, it's not profitable because most people are not willing to pay like 500% more to buy the grapes, because that's what you'd have to charge if they produce 20% of what a young vine would do. So what the vintners do is they rip them out. They rip out the vines and kill them and plant new baby vines. What a horrific thing. The baby young vines, they won't produce amazing flavored wine. They'll just produce a lot more grape. And I'm like, whoa. I want to drink wine made from grapes from a plant that's as old as my father. You understand? I want to protect that. They're healthy vines with deep roots in the Rhone River Valley. So anyway, I just put a whole bunch of money into a vintner in that region that just bought up, that is basically protecting all these old vines. And so I have a bunch of the wine now, but that wine is so fabulous. I could probably store it for 20 years, maybe longer. Anyways. Yeah. Now, I have wine that I've had more than 20 years. And I opened one the other day on my wedding anniversary because on my first date with my wife, I opened up a 20-year-old bottle of Chardonnay, and it was golden like apple juice. And we drank it by the sea, at sunset. And we had nice crackers and cheese and all that kind of stuff. And we poured it, and I'm telling you, the best Chardonnay ever. It tasted like, it was buttery. It was creamy, a creamy Chardonnay. It was fantastic. And it was from, if I remember correctly, it was from Oregon. Gold medal winning, but 20 years earlier. So anyway, so on our recent wedding anniversary, I opened up a bottle that I've held for 20 years. And it wasn't very good. So 20 years is probably too long for a Chardonnay, but a Petit Syrah from Portugal, it could do it. Yeah. Cool. So anyway, so looking at our kitty cat, we're just farting around here. Not a lot happening today, huh? Isn't that amazing? Well, thank you, Nuno. But that's pretty unique to hold wine that long. Most of the wine I'm drinking now, I'm going through a case now from 2016. Probably halfway through the case. It's good. It's not fantastic, but it's good. Mm-hmm. La di do 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 do. Okay. Just farting around. The only thing I do for fun is raise my children. Oh, right on, Nuno. But Nuno, you've known me for forever, right? So, same old, same old. Well, you know, it's interesting to think now that I've been opening wine that I bought when I was a venture capitalist. Right. And I look back and I'm like, wait, that was 20 years ago. I'm like, holy crap. This wine is 20 years old. Right? Like, it's amazing to me. Because it's been a long time, but it hasn't been a long time. But then it's, yeah, cool. Nuno says, yeah, but going to Harvard was great. Nuno, were you around when I mentioned that I was doing that? Or were you already off doing your professional trading stuff? I remember telling people that, of course, I was going to Harvard to be a role model to my children, which is true. But I do remember doing a speech where I was talking to people, and I said, look, Forex is going to be unbelievably difficult. It's going to require vast amounts of your time. And it's going to require some money if you're going to pay for education, whether it's with me or somebody else. You're probably going to need the education. And then I said, so this effort that you're going to make is not going to be like 6 months or a year. It's going to be like 4 or 5 years of almost total focus and dedication. And then I said, I just signed up for a 4-year program at Harvard. A 4-year program. It's going to cost me a lot of money. And it's going to require probably somewhere between 40 and 80 hours of my time per week. My wife had to write a letter that she emotionally supports me because Harvard's going to take me away. And that there's going to be a hardship taken by her and the family and the kids. It's going to be a big deal for everybody around me. And it's for 4 years. And not only do I have to work, through the semesters, I actually have to move to Harvard for the summer and live away from my wife and children. Live in Cambridge every summer for 4 years. And I said, that's all I'm asking for you, for an FX boot camper, for example, that you're going to have to work. If you want this bad enough, you're going to have to make sacrifices. You're going to have to give things up, like your entire summer. Okay? It's hard to imagine, but I think it was 47 weeks a year I was a full-time student at Harvard. 47 weeks of the year. So I'm like, that's all I'm asking from you guys. That level of dedication and commitment and effort, it's going to be so hard to get through. You're going to want to quit at times. But that's all I'm asking of you, and that's what I'm committing to with Harvard. So I had already been there a year, and then I got accepted into the elite program. 99% of applicants were rejected, and only 50% of us got through it. So 99.5% of people that applied couldn't hack it. Holy crapola. 0.5%. But I'm like, I'm going to do it. And even though I'm doing this to be an inspiration to my children, I hope it's also an inspiration for you because, yeah, I had to do Harvard, but I did my webinars even from Harvard. And I was a reasonable husband and a reasonable father and all that kind of stuff. I still had other things going on. So I had to squeeze 80 hours a week into my life. But if I can do that, you can do it, right? It's the same sort of sacrifice. It's not like a false guru kind of thing. Like, that's the kind of dedication that is required to be successful. And so only am I going to ask that of you, I will ask that of myself. And then I said, you know what? 4 years is going to go by quickly. And sure enough, it did. In the moment, it was torture. But now it's been a year. And it's done. And I miss it, in fact. Okay? So, once again, if I can do it, you can do it. It's just going to require a lot. Okay? But you can do it. Most people can't, but you can. And you know it's true. Okay. Now my degree just sits on the floor. It just sits on the floor. Okay? It's cool though. So there's this one. And it says, cum laude. Bachelor degree in economics, macroeconomics, cum laude. Which means I was an A student. And then this is the awesome one. Look at that. Look at that. It's all in Latin. Cool, right? Strange, isn't it? Strange, I think. It's cool, huh? So the graduate degrees are always vertical and in a different language. But in Latin. So just a quick 4 years and a little bit of money and a little bit of time and a little bit of effort and a little bit of dedication and a little bit of sacrifice. But it can be done. That's all I'm trying to tell you, that it may seem impossible. Some of my classes were so difficult that it was ridiculous. Like really ridiculous. You're like, this is stupid. But you can get through it. You can do it. You're like, you can't do this much. And you can. You can do that. You can do it. Okay? And you can be a half-decent child to your parents. You can be a half-decent husband or wife. You can be a half-decent parent. You can be, I wasn't a very good friend. I had to give up my friendships, which was pretty sad. But something had to sacrifice, right? So, and then we got hit with COVID, so now I can't even go out. So I haven't been outside in about 5 years. Pretty amazing, right? But anyways, you can do this, guys. You can do it. It's difficult. I know it's difficult. But it's not hard work. Hard work is digging ditches. Okay, difficult means you're going to have to put in sacrifice, but at least you can wear clean clothes while you work, right? You can be in air conditioning while you work. Okay. Aussie one says you're not Mitchie. Well, the cool thing is, like during COVID, like I don't live in a tiny apartment, so I live in a giant house and I live on a lake. So my kids and I can just play outside in the backyard. You're like it's paradise. So I'm pretty lucky and fortunate for that. Cool. Okay, and look at this. Just like we're just sitting here, Doing our profitable little trades. Okay. Am I lucky? Well, there's one of these things where Harvard tells me that I inherited an advantage. I'm a cis white male, and I probably should be apologetic for it. And I get that. I get parts of that. I can understand that. I had some advantage that I inherited because of that. And I was born in Canada, so have a better chance than born in a third world country or something. Okay, I inherited all that, but nothing else. So some of you guys have seen the video where I tell you my origin story, and you've actually seen where I stood. You can actually see the spot I show you on Google Earth. I show you the spot where I say, I'm getting the F out of here, and I'm going to change the world. And you can see the spot, and you're like, what kind of fool would be in a spot like that and think he's going to go anywhere and do anything, yet alone change the world? And the most amazing thing about that, being a young, poor kid in a shithole of a town in the middle of nowhere, in total cultural isolation, he has a thought like that. And you're like, it's an amazing thought, but how can you turn that into reality? And 5 years later, in my suit I bought from Sears, I'm walking into a high-powered law firm on Wall Street in New York City to sit on the board, to be elected to the board of directors for a nonprofit and corporation, and seeing my fellow directors that are vice president of, General Electric, president of AT&T, representative to the United Nations, somebody from the Quantum Fund named George Soros, and me. Huh? It's amazing what the world can give you if you try hard enough. I put a little bit of effort in between when I stood on that corner in that horrible little town and said, I'm going to change the world. And 5 years later, that's what's happening. It's pretty amazing what can happen. And there's no way I would have imagined that I'd be running a company of 3,000 people. You're kidding me. Just going to New York City would have been great. Just pretty amazing. And I'm telling you, I could barely get through a revolving door. I'm not joking. I was that young and naive. I can barely get through the revolving door. It's amazing how much, even 5 years, you can change your life. It's really unimaginable. But it can happen, I can tell you. Aussie One says, ambition. He got ambition, baby. Last week he's mopping. This week it's the fries. Yeah. Pretty amazing. It's true, right? It's true, truly unbelievable. But that's my story, and it shapes who I am. Hillbilly LG. Yeah. I don't know what that is, Brenda, but it's funny. Yeah, a book you read. Yeah. Yeah. Yeah, that town, it had one street light. One street light. So that's where I'm from, man. No papa. Asshole of a stepdad. Tiny little town. Right? My future, I'm telling you, my future, let's say the average future of that town was teenage pregnancy and alcoholism. No joke. Right? I come from a small town. How small was it? It was so small that the school bus driver was an alcoholic, carried a liter of whiskey in his lunchbox, and everybody knew it. That's it. Like, no, that can't be true, Wade. Oh, it's true. The town I came from was so small and so backwards that the school bus driver was a raging alcoholic, carried a bottle of whiskey in his lunchbox, and everybody knew it because they're all cousins. It's unbelievable. Now, Dr. H is like, that's a great story because I was raised in similar fashion. I imagine that's true for many people here, or some sort of version where maybe you empathize or whatnot, but there's some correlation, let's say. But I'm also here to tell you that you can radically change your reality and the reality of people around you. I know it. Right? Dr. H is violent and drug trafficking and trailer park. I'm thinking of the other neighborhood I lived in as a young kid, actually growing up. And it wasn't full of drugs and trafficking. It is now. But I went to an elementary school that was full of drugs. And, a girl in my 7th grade class was a prostitute. You're like, what the hell? What are you talking about? Now I see my children and what they have. And it's just wonderful. I'm so happy for them. And now I talk with them every day about their future and their lives and their importance in the world. That society needs them to do something successful. They rely. I said, not many people have an opportunity to have loving, supporting parents with money that can, help ensure you have a successful upbringing and opportunities in front of you. And so if that is so rare, then you have like a moral obligation to do something important with your life because you did inherit that. And I've been talking to them openly about that since they were 5. Cool. So, all right. But enough about that, I guess. I'm just sitting here like... So I can't wait till Sunday. Olin says, do I ever take them back? No, never go back. I only move forward. I get antsy if I'm not moving, but I never go back. Yeah, never go back. Okay? Not my problem. Never go back. All right, so let me just thank you for your time and your loyalty and everything that you do and the hard effort that you put into this. You're good people. I like you. So thank you for being here. Thank you to Maida for her generosity and also everything she does for the community. Have a wonderful weekend. Peace on earth. May the pips be with you. May our profits be above average. I wish you the best of luck and all of the success that you can muster. Yeah, Daniel says, dude, imagine being born in a poor country and living in a small rural area. Yeah. Yeah, I get it. Okay. But obviously you have a computer, Daniel, and internet access. That didn't exist back when I was a kid. So in a way, you can get out a lot easier than it was for me to get out. Meaning you could get a college degree from your rural town. You can. Right? You can go almost anywhere and do anything from where you are. And that too is a blessing. And so, yeah. And you'll find the world is constantly looking for a hero, so it might as well be you. And you have a heroic attitude and commitment, so it'll work out. Humanity will find you because humanity needs you. And it'll work out. It'll work out just fine. You'll see. So once again, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. Remember to review all your trades that you did this week. Identify your strengths and weaknesses. And then come up with 1 or 2 things you're going to work on next week to improve. It's not just about throwing down trades and making money. It's about getting really, really, really good at what you do. And that's going to take commitment. Cheers.